By some estimates, the network behind the token Link has facilitated the transfer of over $7 trillion in value across the blockchain ecosystem. This massive movement of capital happens largely out of sight, far removed from the speculative hype cycles that typically dominate the headlines. This volume exists because blockchains have a physical limitation. They are digitally isolated, unable to see or interact with data from the world outside their own code. Link bridges this gap. It functions as an ERC20 token, which means it resides on the Ethereum network while serving as the operational currency for a specific type of digital bridge. The market currently values this specific bridge at approximately $6.2 billion. This valuation suggests that significant capital is being allocated toward the underlying systems that support the decentralized economy, rather than just the individual coins traded on top of it. In 2017, founders Sergey Nazarov and Steve Ellis identified this isolation as a barrier to adoption and began building the infrastructure to break it. This diagram shows the Oracle network, a decentralized node on the blockchain's edge. Without it, external data simply bounces off the network's rigid wall. Chainlink securely translates and funnels this data inside for smart contracts to execute, while also linking previously isolated systems. By providing the data required for automated contracts to function, Chainlink has become a standard intermediary for high-stakes digital transactions. The way the network handles data directly influences the economic structure of the Link token. As this progress bar shows, there is a circulating supply of about 748 million Link tokens, which is capped at a maximum of 1 billion. Chainlink avoids the common practice of burning tokens to reduce supply, choosing a different path for its economic sustainability. It utilizes a reserve system that converts the revenue generated by the network into Link tokens to be held for future operations. This mechanism ties the token's value to the actual usage of the network services, grounding its price in the volume of data it processes. Despite this utility, the current market price for Link sits near $8.28. This chart tracks the distance between today's price and the all-time high of $52.99, reached in May 2021. The gap represents a price decline of 84% from the peak, highlighting a disconnect between the network's adoption and its market performance. This decline aligns with broader market cycles, as the token remains sensitive to the same macroeconomic pressures that affected the entire digital asset class over the last 2 years. Market sentiment has recently stabilized, with many participants identifying $9 as a key psychological resistance level to watch. Retail access to the token remains high, with it being a staple listing on exchanges like Coinbase, Binance, and Uniswap. Chainlink's deep integration with both decentralized and traditional finance suggests its value is tied to its role as the foundational plumbing for global data transfer.